Hey, good morning, everyone. Welcome to Market Insider TV on Wednesday morning. It is August the 7th. Thanks for joining us. Brian Hoops here with Midwest Markets, bringing you our opening commentaries. Grain markets have just closed the night session. Corn fractionally higher, beans up a penny, and the wheat futures were mixed. Couple lower in Chicago and Kansas City, while Minneapolis was fractionally higher. The crude oil has turned sharply lower, along with the stock market. They seem to be kind of following each other, with crude oil down about $1 right now. Stock market off about 20 points in the E-mini S&P in early trade. And this is coming on the heels of just an hour and a half ago trading higher. So it's a pretty volatile market, remains that way. But grains are much more quiet, kind of a holding pattern here. We got a WASDE report coming up on deck, and we'll take a look at those estimates here in just a second. That comes out on Monday at 11 o'clock. As far as media goes, I was on RFD TV yesterday. Today I'll be doing Sirius Satellite Radio program that airs this evening. And then Monday we'll be doing the TD Ameritrade Network, talking about the WASDE report and what we can expect on Monday morning. Then RFD TV again on Tuesday. So a lot of busy activity coming up in here. We're going to try and do a webinar ahead of the WASDE report that will kind of give you an idea what the trade is looking at and what we can expect on Monday's report. So let's take a look at some news and events, things that are happening here. Weather models just really don't have any threatening heat into the middle of August. There is parts of the eastern belt that's dry. In fact, parts of eastern Iowa are turning a little bit too dry here, and certainly would welcome some rain. So there's a little bit of concern, more coming from farmers here about their crops rather than the trade being concerned about crops. In fact, I was asked on RFD TV yesterday about why we're not reacting to it. If there's this dryness concerns, why we're not making any advances in price. And I really think it gets back to the large trading commodity funds. They just got hammered in the month of May. They were short on the wrong side of things. The prices rallied. Then they got long, prices started to drop, and they've just been on the wrong side of it a couple times in a big way this year. And before they start jumping into this market again, they want to see the momentum turn higher in the grain markets. So I think the fundamentals are there to give us higher prices longer term, but we just don't have that money flowing into the commodities at this time. Wheat prices should remain under a little pressure in here based off of the Egyptian purchase. They bought 415,000 metric tons of Romanian, Russian, Ukrainian wheat yesterday. Purchase price was about $217 a metric ton. That is the equivalent of buying the hard red wheat out of the Gulf of Mexico, except you've got to pay shipping costs on top of that. So we're not competitively priced whatsoever, and that means we really cannot afford to rally too far. The best chance of rally for our wheat market is on the back of corn and soybeans. If they would take off and rally, you'll see some buying and short covering in the wheat kind of as being drug along. But just based off of its own fundamentals, there's really no reason to see us rally. And in fact, we probably should trade lower to get our prices a little bit more competitive. Ahead of the WASDE report on Monday, trade will be looking for corn plantings at about 87.7 million acres. We also look for yield at 164.9, production at 13.1, and that gives us ending stocks of 1.570 billion. These are all pre-report estimates from several different firms around the Midwest. The acreage number would be down about 4 million from what the USDA reported in July. Production is down a little over 700,000. The yield is down about 1.1 bushels per acre, and the ending stocks was over 2 billion last month. So this looks to be a constructive trade report. Interesting will be is if we deviate much from this, if we see a much smaller planted acreage number, for example, even if we don't change bushels per acre, that'll change the production a significant amount and will reflect much tighter ending stocks. So these are the numbers, kind of our baseline, that we're going to have to differentiate from to see a sharply higher market come Monday by the close. For soybeans, we're looking at about 80.9 million acres. That'd be actually up from July number. The soybean production would be down slightly as yield would be adjusted down to 47.4 from 48.5, and our ending stocks would be estimated at 810 million, a little bit lower than what we saw in the month of July. So, there is some some numbers here that are going to be adjusted come Monday morning. No deliveries against August cattle overnight. We don't expect there will be, as we're sharply discounted to the current cash markets and really have not seen much in the way of any cash trade. A little bit of regional basis at 182 on Tuesday, and hog weight's down nearly a full pound from last week and are 2 pounds below last year. This should be supportive to the hog market. It badly needs some supportive news, but I'm afraid until we get something worked out with China, we're going to be on the defensive in this hog market. Have a good day, everyone. Hope you have a great day of trade. Good luck, and let us know if you have any questions. This has been Brian Hoops for Midwest Market Solutions.